Welcome to today's Explainer. We're dropping straight into the action of August 7th, 2026. And man, the energy today is just explosive. We're looking at a market locked in a really fierce, high-stakes battle of opposing forces. It's a day of sharp contrasts, shifting momentum, multi-billion-dollar showdowns, basically the whole shebang.
So let's dive right in. We are seeing a dramatic split mood today across the entire digital asset landscape. On one hand, you've got these institutional giants acting as a massive wall of bullish support, aggressively defending key price levels. But then, on the exact opposite side, there are these really heavy bearish threats, stuff like regulatory shadows and massive security breaches, just dragging the whole sentiment down. In fact, things have gotten so tense that the fear and greed index has actually slipped into extreme fear, currently sitting at a pretty fragile 25 out of 100.
But despite the fear, the heavyweights are stepping up as the titans hold the line and defend their support levels. A crucial piece of this defense is this absolutely massive $1.2 billion figure. This represents the sheer amount of Bitcoin that large holders, the whales, have accumulated recently. These major players are heavily fortifying Bitcoin's defenses right now, stepping up their buying and effectively taking that Bitcoin right off the table so it can't be immediately sold. They are definitely holding the line. Plus, serious backup is arriving directly from Wall Street. Check this out. Weekly U.S. spot ETF inflows are just surging. We're talking $754 million flowing right into Bitcoin ETFs and another $195 million into Ethereum ETFs. That is practically $1 billion in fresh capital, acting as this impenetrable energy shield for prices. It's really helping to offset that broader risk-off sentiment that's been totally spooking retail traders. However, it's not all good news today. XRP is definitely taking a major hit from regulatory bears.
Right now, macroeconomic politics are really dictating the flow. The U.S. Senate just decided to delay the vote on the highly anticipated Crypto Clarity Act until September 2026. And this legislative delay, it's acting like a massive bearish weight on the market. It's totally dampening sentiment for U.S.-linked tokens and decentralized finance plays, leaving assets like XRP super exposed.
And you can see the fallout clearly. This delay triggered a brutal 5-day slide for XRP. The momentum shifted so hard that institutions actually started taking evasive maneuvers. Look at Bitwise. They literally rotated $12 million out of their XRP ETFs and moved that capital straight back into the relative safety of Bitcoin and Ethereum. Because of all this pressure, by today, August 7th, XRP has been pushed all the way down to $1.03. Which brings us to a really tense cliffhanger for altcoin traders. That $1 mark is a massive, massive psychological support level. If the bulls can't hold this critical line of defense, well, technical indicators, like an RSI reading sitting at 36, which signals strong bearish momentum, suggest we could see a rapid, unmitigated drop straight down to 94 cents. Meanwhile, there's another stealthy issue lurking in the background, a real shadow threat stemming from July's staggering hacks. The sheer scale of this is honestly pretty mind-blowing. Hackers plundered $247 million in July alone. That makes it the second highest monthly total for 2026. But you know what the most alarming part is? It's not just the overall total. It's that over half of that theft, $130 million, came from one single, devastatingly targeted attack. The anatomy of this attack is chilling. A firmware vulnerability was discovered in Coldcard hardware wallets, and it allowed thieves to siphon $130 million in Bitcoin out of more than 7,300 compromised wallets. This is sending total shockwaves through the community, mainly because it completely shatters that long-held myth that offline cold storage solutions are immune to technical ambushes. It really proves that nowhere on this battlefield is completely safe. As if all that wasn't enough, we are also looking at a final showdown today with a $2.4 billion options expiry. The lines are fully drawn here. We have 32,000 Bitcoin options expiring, which carries a notional value of over $2 billion, right alongside 177,000 Ethereum options valued at $340 million. But the most critical part you need to watch are the maximum pain points. That's the exact price where option buyers stand to lose the most money. For Bitcoin, that's sitting right at $64,000. And because current market prices are hovering dangerously close to these crosshairs, you can definitely expect some explosive market action today as institutional market makers frantically buy and sell to adjust their hedges before settlement.
But hey, it's not all doom and gloom. We do have a glimmer of hope and a pretty interesting plot twist in the altcoin space.
There's a solitary victor breaking out of the pack today. Cardano, or ADA, has actually surged over 7% to hit 20 cents, successfully pushing past some really heavy 100-day simple moving average resistance. This is a massive technical victory. It signals a strong shift in momentum favoring the bulls for this specific asset. But just a quick word of caution if you're trading this. With its relative strength index getting up near 80, the buying pressure might actually be reaching an exhaustion point pretty soon. So keep an eye on that.
Finally, we have to look at the ultimate catalyst. The outcome of today's split market battle isn't just going to depend on crypto fundamentals or technical breakouts. Actually, everyone, from the biggest whales right down to retail traders, is holding their breath for the U.S. jobs report. This macroeconomic data is huge because it'll basically dictate the Federal Reserve's next interest rate attack plan. A weaker jobs market could mean easier monetary policy, which is generally great for risk assets like Bitcoin. But a strong report, that could keep rates high and totally crush the current momentum.
So, as we wrap up today's explainer, here is the final question you really have to ask yourself as you survey this digital battlefield. Will this billion-dollar institutional ETF armor hold the resistance at $65,000, or will the shadows of regulatory uncertainty, these massive hacks and macro fears just pull the titans down? The battle lines are drawn, the options are expiring, and the whole market is waiting. Thank you so much for joining me for this explainer, and definitely keep your eyes on the charts.